Bitcoin, oh yeah, okay, a week or two ago we're at 126. We're not that far off the all-time high. We're at 106. I mean, I look at it today, and honestly, I'm selling gold-related things to buy Bitcoin-related things because it's such an easy and obvious trade.
Yeah.
Because in my opinion, what will happen is sometime in the next 1 to 6 months, and I can't say when because nobody ever knows, but if Bitcoin's going to wake up and like that line, it's going to be pissed off. And it's going to go from 120 to 250 for starters, and maybe much higher, maybe 300-400. I mean, I think 400 is possible. I'm not saying it'll stay there forever, but I'm just saying it's gonna be pissed off. It's gonna really run hard. You can see that it's coming. Monetary debasement is entering the mainstream.
Bitcoin has experienced a notable period of instability lately, following a substantial retreat after setting an all-time high just last month. This pullback mirrors broader market anxieties and a cooling of investor enthusiasm, particularly concerning institutional exchange-traded product inflows. The digital asset is currently trading at a crucial level, having lost the key support that many investors watched closely, signaling a potential shift in short-term momentum after a truly wild year of gains and volatility. Amidst this market fluctuation, investor Lawrence Lepard remains resolutely bullish. Recalling that Bitcoin was trading very close to its recent record peak just a couple of weeks prior, he views the current valuation, hovering around $101,370 after dropping below the $100,000 threshold, as a major buying opportunity. Lepard is acting on this conviction, actively selling his gold-related holdings to scoop up additional Bitcoin, an exchange he calls an easy and obvious trade. Lepard has a dramatic prediction for the near future. He forecasts that Bitcoin will wake up aggressively within the next 1 to 6 months, potentially surging from $120,000 to $250,000, or even piercing $400,000 in a sharp catalyzed run. This surge, he contends, will be fueled by mainstream awareness of ongoing monetary debasement. As he puts it, the digital asset is poised to get pissed off and charge hard, like a lion emerging from dormancy, as economic pressures force a broader shift towards sound money alternatives. Let's take you back to the interview, where Lawrence Lepard delivers an unpopular view of the current valuation and exposes the hidden, powerful mechanism behind Bitcoin's next parabolic move.
Another thing that happened that I thought was really significant, when Stephen Moran, he was the head of the Council of Economic Advisors, he just became Fed chairman, or Fed governor. When he was being vetted by the Congress or Senate, he said something along the lines of the Treasury and the Fed should work together to control long-term interest rates. And if that's not yield curve control, nothing is. The only way to do that is through quantitative easing. As we all know, quantitative easing is definitely directly money printing. Long story short, all of these factors, I think, filtered out into the greater gold universe. And everybody said, oh my God, I don't own enough gold. And that's true, really, because B of A survey recently showed that 40 some odd percent of portfolios in the US have zero gold, and another 20% have less than 2%. So effectively, 60% of the US investing public has basically a de minimis amount of gold. Yeah. And the ones that had more than 10% gold in their portfolio was like 6%. So gold is one of those things, nobody's there, and yet all these facts have just taken place that everyone's kind of waking up and going, oh my God, I need to be there. Related to that, I mean, it's an interesting point, is that one, gold is up a lot year to date, and so people tend to chase performance. Two, stocks are not. I mean, NVIDIA is up 38% year to date. The gold stocks, the portfolio I manage in the gold stock funds, gold stock indices are all up 120%.
Wow.
This year, right? So it's kind of like, okay, hang on a second. The stock market's up 14% and gold stocks are up 120%. Something's going on here.
Yeah.
Right. And so there's an adjustment taking place. And I think what you're just kind of seeing is a quick recognition of the fact that, they can't stop printing money. Now, let's go back to the mainstream awareness of this. This is really interesting to me, and I tweeted about it. You're starting to see big names who are traditionalists talking about it. And JP Morgan said, the reason the price of gold and Bitcoin are both strong, and Bitcoin still is strong, even though it's off its 126 high, is that what we've got going on is what they're calling the monetary debasement trade.
Yes.
They now have a name for something that you and I have believed in for 5 years. We've thought it was certain. We knew it was coming. We believed in it. They've now named it.
And it's bigger than Bitcoin,
and
right?
It's bigger than Bitcoin.
Yeah.
It's gold and Bitcoin. And, I'm sure a lot of Bitcoiners and people listening to this are frustrated that Bitcoin's price hasn't moved. But first of all, let's consider that Bitcoin's done pretty well. I mean, last summer it was at 60. it's 106 now or whatever. It hit 126, whatever. It's still up quite a bit. I mean, that's better than the stock market.
Yeah.
And there's a big history. And if I don't have a chart that I can refer to here, but maybe you'll pin it in the notes after the show, I'll send it to you. There's a large history of gold smelling debasement first, because it's more widely held. Everyone knows it, knows what it is. And Bitcoin, a little bit more narrow, a little bit more risk on, a little bit more specialized group of people that hold Bitcoin. And it wakes up later, but then it goes harder. And so the classic example of this, and it's really laid out nicely on this chart, which you'll pin, is that in 2018, 2019, when, there was a repo blowout and there were a lot of kind of monetary events that kind of led people to, no, he's going to have to pivot and print. And they didn't know COVID was coming, but you could see it. And gold was marching up nicely. Bitcoin was flatlined, right? And then COVID hit and gold went up a lot on COVID. Bitcoin was still flatlined for, 3 to 6 months. There was kind of a lag. And then one day Bitcoin woke up. As the chart shows, gold and silver reacted first.
Yes.
Then Bitcoin sat really dormant for a long period of time. And then it really woke up. And this reminds me very much, there's a great video of Christopher Walken talking about how, the lion sits around and lets people kind of play in his sandbox for a while. And then at some point he just wakes up and gets pissed off and goes down and just kills all the hyenas. And that's what happened in 2020. Bitcoin was kind of locked in at $10,000 into, and gold was going up, and everyone's like, how come gold's moving? Bitcoin's not moving. What's, this digital gold, it's not working. Remember that? I remember it. All my friends were like, what's going on? I was like, just wait. And then suddenly Bitcoin went from 10 to 60.
Yeah.
In a very rapid period of time. It did a six-packer. Okay. So, it feels where we are today right now feels to me like the exact same thing.
Yeah.
Gold's moving, gold smells it. The print's coming, the debasement's coming. Okay. Bitcoin, okay. A week or two ago, we're at 126. We're not that far off the all-time high. We're at 106. I mean, I look at it today, and honestly, I'm selling gold-related things to buy Bitcoin-related things because it's such an easy and obvious trade.
Yeah.
Because in my opinion, what will happen is sometime in the next 1 to 6 months, and I can't say when because nobody ever knows, but if Bitcoin's going to wake up and like that lion, it's going to be pissed off. And it's going to go from 120 to 250 for starters, and maybe much higher, maybe 300-400. I mean, I think 400 is possible. I'm not saying it'll stay there forever, but I'm just saying it's gonna be pissed off. It's gonna really run hard. You can see that it's coming. Monetary debasement is entering the mainstream, and I think a lot of people, there's another point I would make that I think is an important one to understand. There are a lot of people calling me and say, "Gosh, gold's up so high now.
Yeah.
We've got to sell it.
Yeah.
We've got to sell it." And what is too high? I mean, yes, it's a lot higher than it was, but measured against what? And that's the important thing to consider. If you consider all the fiat currency that's been created over the last 50 odd years since we went off the gold standard, it's enormous. I mean, to go to 100% coverage of the monetary supply of the United States with the gold that we currently hold, the 261.5 million ounces that we'd have to be at $90,000 an ounce. We're not, right. That's how much money, which isn't, it's not as much a statement about gold. It's just about how much fiat money we've created. And the point is, you don't need to have 100% coverage.
Yeah.
Okay. And that's not going to happen. Okay. I'm not suggesting, but you're still right now at a level at 4,000 where you're way below the mean coverage over the last couple hundred years in societies that had gold as a part of their monetary system. And so, to my way of seeing it, 4,000 gold could easily double and still kind of in the fairly valued range. So look, investors, in my view, Bitcoin and gold are really two flavors of the same trade. One, they're both sound money. Gold is analog sound money. Bitcoin is digital sound money. They both are sovereign currencies that cannot be printed by government. That's why in a time when governments being as irresponsible as ours are being, these are the safe havens, okay? Gold is the ancient version of it, and some people shit on it, but they shouldn't, because it got us this far, and before 2008, it was all we had. And it has the advantage of being very widely distributed and having a fraction of the volatility of Bitcoin. A big down year in gold is 15%. We all know Bitcoin's had much larger corrections than that. So
we just had one in one day.
Right. So for those people who are kind of thinking, I don't like corrections, I'm willing to sacrifice the upside in order to protect my downside, gold fits. I mean, I have some very old clients who, they own a little Bitcoin, but they own a lot more gold. I get it. And there's a reason for that. So, if you're, in the way I've kind of, in the modern world, I kind of look at it a little bit as like gold is your bond. It's not sexy, but it's not going to lose value. and Bitcoin is your growth equity.
Yeah.
You know, it's going to outperform it massively, but at the price of higher volatility. So
some developments have rippled through the gold market, prompting investors to realize they hold too little of it. Gold has surged 120% year-to-date in related stocks and indices, far outpacing the stock market's 14% gain or Nvidia's 38%, signaling a change as people chase performance amid ongoing money printing. Mainstream voices like JP Morgan now label this the monetary debasement trade, boosting both gold and Bitcoin, though Bitcoin often lags before accelerating, as seen in 2019 to 2020 when gold rose first during repo issues and COVID, while Bitcoin stayed flat at $10,000 before skyrocketing to $60,000. Gold's current $4,000 price isn't excessive when viewed against fiat expansion since the 1971 gold standard ended. To fully back the U.S. money supply with existing reserves would require $90,000 per ounce, and even doubling to $8,000 would align with historical norms in gold-backed systems. Bitcoin and gold serve as complementary safe havens against government overreach, with gold offering lower volatility as the established analog option and Bitcoin providing higher upside digital potential, akin to bonds versus growth stocks for risk-averse investors.
And so the London physical silver supply that they have compared to the total claims outstanding is about 7%. So the model I like to use for this is like, think of the game of musical chairs, right? And the physical silver is a chair, and the rest, the 100% claims against the 7% that exist, if all those people with a claim say, give me the silver, it's not there.
Yeah.
And that's part of what's going on with the silver. Same is true with gold. And, you know, in that case, it's only a 10 to 1 or a little over a 10 to 1 on the silver in terms of claims. But I actually think beyond that, it's actually much higher, that there are claims outside just what's on the COMEX or on the LBMA. And so, I think the claims could be kind of 100 times what the underlying is.
For silver.
For silver
Yeah.
and for gold, actually on both of them. And so, and this is why if you're going to own, just like if you're going to own Bitcoin, it's not your keys, not your coins. I mean, because they could grab an ETF. It's kind of true with gold too.
Wow. Okay.
Possession's 9/10. And if you read the GLD prospectus or the SLV, the two biggest ETFs in the gold world, those prospectuses have all kinds of holes in them that say they can do deals with counterparties, they can do deals in the futures market. Well, that's all fine, except that if some of the gold they own is from a futures dealer that's like Lehman Brothers, and the gold price explodes and Lehman goes down, then they don't really have the gold, do they?
Yeah.
And so the only two gold ETFs I recommend are the ones run by Sprott, which are PHYS and PSLV. But even better than that, I still think possession is 9/10. You should, grab the coins or the bullion and hide it somewhere or store it somewhere. So, but this is the responsibility of having a bearer asset. And, in a world where there's a lot of trust, you don't need these bearer assets. You could trust everybody to do, but guess what? This, as Satoshi said, the central banks, they've abused this trust over and over and over again. And they abused it in the gold and silver market. And they figured out how to suppress those prices. Okay. And it's very, very clear. The documentation on this is unrefutable. It's all on the GATA website, Gold Anti-Trust Action Committee, GATA.org.
So how did they suppress the?
Well, they suppress it by coming in and selling paper that they don't, at times when it looks like it's going to go up. And consider that they're the biggest player at the table, that they can coordinate through all the central banks and the BIS, that they use hedge funds in the Cayman Islands, et cetera. And furthermore, they don't have a balance sheet and a P&L. They're talking about, they just do it with fiat. And if they take a big loss, they don't care. They just print more of it.
Yeah.
So the gold price has been horrifically manipulated for all these years. And that's how we got to the case of gold being at 4,000 and what it should be at 90. That's how that occurred.
Okay.
It's because they knew it was the canary and they shot the canary. Okay. So the interesting thing where people probably want me to go, and I should touch on it, is
paper Bitcoin.
Exactly. Okay. So let's start off. Is there paper Bitcoin? Yes. Anytime somebody has a futures contract and says, I'm selling you a Bitcoin and you're buying a Bitcoin, I've just created a Bitcoin I don't have. And you've just bought from me and I'm your counterparty. You claim to have a Bitcoin. You think you have a Bitcoin, but you don't. And maybe if I'm honest, I went and I actually bought the Bitcoin, but it's possible that I didn't. So your demand for Bitcoin got solved by me issuing a paper claim. So think about that. That doesn't make the price of Bitcoin go up the way it should. So these futures markets are out there and, they're much smaller than the gold futures market. Okay. And they've had much less, first of all, they have much less time to develop. I mean, this Bitcoin's only 16 years old, and it's really, from an institutional perspective, really probably only kind of 5 or 8 years old. I mean, nobody was paying attention to this at 2017, right? So but having said that, if you look at the growth of the futures market, it's been substantial. It has been substantial. And could they be messing around with the price on it? Yeah. And I mean, Vince Lance, a guy I really respect, who's in the gold and silver space, also a Bitcoiner, and understands the Bitcoin, just says, look, guys, this is what's going to happen. You get a financial asset and the big players are going to get in here and they're going to start getting involved. The difference with gold is that this is a different animal in terms of its behavior. Gold never went up 6 times in a year. And so, yeah, you could sell paper Bitcoin and maybe some of the G-SIBs have done it. But if you do and you don't meet your contracts, you're going BK really, when you go up 5 or 6x, you go BK really fast.
Yeah.
Right.
Yeah.
So I think the volatility of it is actually kind of a defense mechanism, right?
Yeah.
In to prevent people from getting too aggressive at suppressing it. So, I don't know. We'll have to see. And I watched the statistics on the size of the futures market, the perpetuals outstanding on Binance. And recently I think it was as large as 16 billion, which is a big number.
Yeah.
But what are we moving? I think we're moving 20 or 30 billion of Bitcoin a day. So it's not trivial, but to me, the amount of paper Bitcoin still pales in comparison to the size of the amount of paper gold.
Okay.
And I think that ultimately in Bitcoin, the free market, Bitcoin will crush this monster, and they're not going to be able to fully suppress Bitcoin in the way that they fully suppress gold, in my opinion. To be determined. I mean, if they got really aggressive about it, who knows? I mean, again, it goes back to the government policies. I mean, if the government really decides that they want to get involved in this and screw with it, they could try and mess it up. It's pretty anti-fragile though.
Yeah.
And so we'll see.
To close off the silver conversation, is the reason silver also has been rising because of the debasement trade, or are there other things at play?
Yeah, that's a really great question. Silver's like the wild child of the space of the precious metal space. I mean, gold has always been, so silver's been largely demonetized, right? I mean, we know that you look at gold, silver over the years. I mean, gold is up and to the right. I mean, gold silver ratio used to be 15. It was recently as high as 100. It's now come back down to kind of 80. And the monetary role of silver has been diminished severely. And the countries that bet on it, India and China, they screwed themselves by betting on it. Okay. So that's point one. Stock to flow is not nearly as good in silver. There's not as much stock out there, and it's getting consumed and it's getting used for industrial uses. What does all that mean? And the other thing is, monetarily, size-wise, it's a much smaller market. It's a tenth of the size of the gold market, even less in terms of the amount mined or the underlying value of what's traded. So what that does mean is when you get a precious metals bull market, silver runs really hard. So a shortage creates a real price bump. And the amount of silver input into things is relatively small enough that even if the price of silver doubles, it doesn't mess up the price of your iPhone.
Okay.
I mean, your iPhone has a little bit of silver in it, but it's a small enough amount that it's not going to, screw up the pricing. So the point I guess I'm trying to make is that, and historically, if you look at all the historical precious metals bull markets, gold moves first, silver follows. It's kind of like Bitcoin. Silver follows later and harder, and it goes even further. In my view, until recently, silver is the only commodity in the world that had not taken out its all-time price hike. We had a high of 50 in the Hunt brothers in the 80s, in 1980. We got a high of 50 in 2011 after the GFC, drove both the precious metals up greatly. And then since that time, we've languished around, much, much lower. We just went through 50. We're at 53 right now. My way of saying, I think we're going to 150, 200, 250. Some people think we're going into the thousands. I don't know about that, but we're going a lot higher because there's a limited amount of supply.
Lawrence Lepard pointed out that London's physical silver supply backs just 7% of outstanding claims, creating a setup like musical chairs. Plenty of paper promises, but not enough real metal if everyone demands delivery at once. He noted a similar issue with gold, where official LBMA ratios show about 10 claims per ounce of physical, though he estimates the true figure could hit 100 times higher when including off-book positions globally. Lepard echoed Satoshi Nakamoto's view that central banks have squandered that trust time and again. These institutions, he explained, dump unbacked paper claims during rallies, coordinating via the BIS, central banks, and offshore hedge funds without fretting over profits or losses. They just print more fiat. This tactic, Lepard said, has capped gold far below its potential $90,000 per ounce needed to back the U.S. money supply fully, silencing what could have been an early inflation warning. Shifting to Bitcoin, he highlighted how futures create paper coins through contracts where sellers promise delivery they might not have, siphoning genuine demand without always lifting spot prices. Recently, Binance Perpetuals reached $16 billion outstanding against $20 to $30 billion daily spot trades. Yet he viewed this as minor compared to gold's paper overload, betting Bitcoin's decentralized strength would fend off total suppression, even if governments probe its limits. Regarding silver's momentum, Lepard called it the rebellious outlier among precious metals, having lost much of its monetary clout over decades. The gold-silver ratio, once 15 to 1, ballooned to 100 to 1 lately before easing to 80 to 1, as nations like India and China backed away from heavy reliance. As we conclude, what do you think Bitcoin's next big move is? Will it bounce off the $100,000 support level like it did in past dips? Or are we heading toward that $94,000 floor if the RSI stays oversold below 30? Please drop your thoughts in the comments below, share this video, and hit your thumb on the like button. Thanks for watching. Don't forget to subscribe.